Hello everyone. In this video, we will learn when we should enter a long position and when we should enter a short position. There are many different methods for us to find entry points for long position and entry points for short positions. One of my methods is to identify at support and resistance zones. And at the support zone, if a reversal candlestick pattern forms, we will go long. And at the resistance zone, if a reversal candlestick pattern forms, we will go short. And with my method, we must identify the support and resistance zones. We can see that for BTC on the daily candle, we have a support zone. To identify the support zone, we will determine its bottoms. And here we can see this is one bottom, the second bottom, the third bottom, and the fourth bottom. And we connect these four bottoms together. That is the area called support. Support is a zone, not a single point. Why do I draw it from here to here? That's from this candle wick to this candle body. We draw a line across to touch this candle wick. So this is called the support zone. And the support zone is where the price repeatedly fails to go down and bounces back up again and again. That is the support zone. And we only open a long position at the support zone when a reversal candlestick pattern forms. That means once we've identified the support zone, we will look for the point where we can go long at that support zone. And conversely, we will short when we find a resistance zone and a reversal candlestick pattern forms at that resistance zone. First, we will identify the support zone, right? That support zone is made up of the lows, right? 1 low, 2 lows, 3 lows, 4 lows. And with many lows like this, we draw them together. That is the support zone. And with the daily candlestick, the support zone is quite strong. When the price hits the bottom 2, 3, or 4 times, meaning the more times it touches the bottom without breaking through, the stronger that support zone is. And here we can see that BTC at this zone dropped once and couldn't break through, dropped a second time and still couldn't break through. And even on the third attempt, it still couldn't break through. So with these 3 attempts, we have a support zone that's considered a strong support. At this support zone, we will look for a reversal candlestick pattern. We will open a long position. That means we only go long at the support zone and we will short at the resistance zone when a reversal candlestick pattern forms. Here is the path right below this kind of zone. For Bitcoin, the zone from 59,600 to 62,500 is the support zone for Bitcoin. And next, where is the resistance zone? We can see that resistance zone on the daily candlestick chart. That's this bottom area, this bottom here, and this bottom here. We drag it over here and meet the peak. Here we meet the peak. So for its resistance zone, we will drag from this point over to this side. There. This is its resistance zone. Understand? And we can see that when it goes up to the resistance zone, it can't break through and reverses downward, then continues to go up, touches the resistance again, can't break through and reverses downward. So we only ever enter a long position when we clearly identify a specific reversal candlestick pattern forming right at the support zone, which strongly indicates an upcoming upward move. And similarly, we only enter a short position when the price reaches the resistance zone and forms a clear reversal candlestick pattern that indicates a potential downward move. For example, here is the daily candle's support zone, right? This is the daily candle support zone, and it goes up, then down. And when it goes down, it can't go any further and has formed this reversal candlestick pattern. This is a bullish candlestick, right? Here, if we draw a line across this spot here, this is the bottom, right? The second bottom is this one. We draw from this side over to here. There. So this is called the support zone, the H4 support, see? And we've seen it go up here. It goes back down to the support zone and can't break through. This spot is called a false breakout. Do you see? And it couldn't break through. It continues to form a reversal candlestick pattern here. What is a reversal candlestick pattern? You need to understand the different types of candlestick patterns. These include bullish candlestick patterns, pin bars, dragonfly doji, or hammer candles. You need to understand the different types of candlestick patterns. And when you understand candlestick patterns, what are those patterns? Candlestick patterns are only effective at support and resistance zones. When a candlestick pattern forms at a support zone, the price will continue to rise, like this, going up here. it continues to go down here, and a candlestick pattern appears here. This is a drop row, a red one here. Next is a green drop row here. It looks like a dragonfly doji here. And next, what do we have? A green candle for confirmation here. This confirms that the price will continue to rise, that the buyers are dominating. That's why it keeps going up. Here, it continues to go down, touches the support zone, and then continues to be dominated by green candles moving upward. So we will enter a position, we will go long at the support zone. We are only allowed to go long at the support zone, right? And if a reversal candlestick pattern forms at the support zone, then we will enter a long order. If a reversal candlestick pattern hasn't formed yet, at least 2 candlestick patterns or more, then we will only enter the trade. If a reversal candlestick pattern hasn't formed yet, that is, for example, in this area here, the sellers are dominating and pushing the price down. If in this area a reversal candlestick pattern does not form, meaning the sellers are still strong, then the price will continue to break downward. But at this point, the sellers have weakened and a candlestick pattern has appeared indicating a reversal in favor of the long side. And as we can see, the price has started to rise again. As for short positions, we need to identify a candlestick pattern at the resistance zone, right at this resistance area. And at the resistance zone like here, it has provided resistance like this, a double top pattern, these 2 tops, on the H4 time frame. And it has formed a bearish engulfing candlestick here. In this pair, green candle, red candle, green candle, red candle, when it continuously forms bearish engulfing candlestick pairs like this, the price moves downward. That means at this resistance zone, a reversal candlestick pattern has already formed, so the price goes down. At this point, we will short right here, like this. We short when a bearish engulfing candlestick forms. When this bearish engulfing candle appears, we short. And our take profit will be somewhere around here. Our take profit will return to its support zone. That means there's another zone here. Here. This top, this bottom. So if you draw it across at this 64 zone, that's the support area. So that's our first take profit target. Next is the 62 and a half area here. That's our second take profit target, right? So what do we need to determine? We only enter a long position at the support zone when a trend reversal candlestick pattern forms. The more candlestick patterns there are at the support zone, the higher the probability it will continue to rise. And we only short at the resistance zone. At the resistance zone, the more reversal candlestick patterns that form, the higher the probability it will continue to go down. In technical analysis, when we do technical analysis, we have a 70-30 ratio. 70% is the chance to win and 30% is the chance to lose. So when we identify support and resistance zones, the larger the time frame with more bottom than tops, right? For example, on the H4 and daily candles, the support and resistance zones are much stronger compared to M30. On H4 or daily candles, the more tops and bottoms that are formed, the stronger those support and resistance zones are. And at that point, we will look for reversal candlestick patterns at the support zones to go long. Remember, at the support zone, we should only go long when a reversal candlestick pattern forms. The more patterns, the better. And it's the same at the resistance zone. Only when more reversal candlestick patterns form should we go short. And we set our stop loss a bit above for shorts and a bit below for longs, right? For example, take a look at BTC's daily candle. Here, BTC's daily candle dropped down here, but it couldn't break through. It created a false breakout, right? It didn't even break this zone. It's a false breakout. So because it created a false breakout, what does that mean? It went up thanks to these 2 candles, right? What do these 2 candles confirm? The buying side has regained strength and completely taken control. And as we can see, the price has moved up. See, right? So to sum up, candlestick patterns are only effective at support and resistance zones. In other areas, they don't work. You understand? And we only go long at support zones and short at resistance zones when a reversal candlestick pattern forms. The more reversal candlestick patterns, the better. The types of candlestick patterns here can be bullish engulfing, bearish engulfing, hammer, pin bar, or dragonfly doji, right? We need to learn the different types of candlestick patterns, the Japanese candlestick patterns. And these candlestick patterns are only effective at resistance or support zones. If they're in between support and resistance, if these candlestick patterns appear between support and resistance, they are not effective, okay? Because candlestick patterns appear when there is a trend reversal. For example, when the price rises from below and hits a resistance level, a candlestick pattern forms, which means it confirms that the buying side has weakened and the selling side is getting stronger when a reversal candlestick pattern appears. Similarly, when the price drops and hits a support zone and a reversal candlestick pattern forms, it means the selling side has weakened and the buying side is getting stronger. And when it gets stronger, that means we can go long. This is how to identify a buy call order. If you find this helpful, please subscribe to the channel and click the notification bell to receive new videos every day. Hello everyone.